In recent news, China and Brazil have struck a deal that signals a shift away from the reliance on the US dollar in their trade relations. While the title may suggest a catastrophic event, it is important to understand the evolving landscape of global currencies. The US dollar has been the dominant reserve currency for the past 80 years, providing stability and serving as a medium of exchange in international transactions. The concept of a reserve currency refers to a currency accepted worldwide, facilitating global trade by maintaining a predictable value. Since 1945, the US dollar has held this position due to its perceived safety, resilience, and stability. By pegging the value of other currencies to the US dollar, countries mitigate the risks associated with fluctuating exchange rates. This system has been instrumental in promoting economic growth and facilitating seamless international transactions. However, the status of the US dollar as the world's reserve currency is not permanent. Throughout history, there has been a pattern of shifting global economic orders, with rising economies challenging the dominance of existing economic powers. The British pound, for example, held the status of the reserve currency for 105 years before it was replaced by the US dollar. Prior to the pound, other currencies such as the Dutch guilder, Spanish and Portuguese currencies, and Venetian gold had their respective reigns. These transitions occur approximately every 100 years and can last between 10 to 20 years. Renowned billionaire Ray Dalio has extensively analyzed the rise and fall of reserve currencies, highlighting key phases: the rise, the top, and the decline. During the rise of a new reserve currency, there is a period of peace and prosperity, characterized by investments, borrowing, and a focus on education, innovation, and productivity. As the leading economy prospers, the value of its currency increases, and its time becomes more valuable relative to other countries. However, this also attracts the attention of other nations, who replicate innovations at a lower cost, eroding the leading power's competitiveness. The tipping point occurs when faith in the reserve currency wanes. People start to sell rather than reinvest, causing the decline of the currency. Economic downturns and high levels of debt often force governments to choose between defaulting or printing more money. Throughout history, central banks have stepped in multiple times to finance industry collapses and economic crises. Printing money devalues the currency, leading to inflation. During these challenging times, the wealthy tend to move their assets to safer investments in currencies, creating opportunities for other nations to challenge the existing order. In the present, there are indications that the US dollar's position as the dominant reserve currency is weakening. The exchange rate against other currencies has gradually declined since 2020. However, it is worth noting that the US dollar's value is still higher than it has been in the past 20 years. Additionally, the demand for US 10-year Treasury notes, which serve as a safe investment, remains strong. On the other hand, foreign currency reserves held by other countries show a steady decline in US dollars, with other currencies gradually taking its place. China, in particular, has been steadily reducing its reliance on the US dollar since 2010. It has actively pursued trade agreements that enable direct currency swaps with other nations, bypassing the need for US dollars in transactions. Countries like Russia, India, and South Africa have also been